Hello students, I hope you all are doing good and keeping yourself safe and healthy. So today we will learn some special entries of journal. Before we do some more and learn some more journal entries, we solve the questions. The first one is bad debts recovered. We know that bad debts is an expense for the business. Bad debts is the amount which is not recovered from the or the amount which is not paid by the debtors or the customers. So that becomes our bad debts. Suppose a debtor has to pay 10,000 rupees to us, to our business, but the debtor is only, we are able to get only 9,000 rupees, 9,000 from the debtors. So 1,000, it becomes our bad debts. But sometimes these bad debts are recovered. We get back the bad debts. Sometimes it so happens that the bad debts previously written off are subsequently recovered. In such cases, the following entry is passed. So sometimes, so what we do is we put some amount which we feel that we will not get from the debtors as bad debts account. We put it in the bad debts account, and so what we have previously written off, that means we have completely said that now this money will not be received at all. So let us just write it off. Let us just get over with this and we will remove this completely, because there is no chance of getting any money back. So the business, they put some amount as bad debts so that that money can be, so that that loss can be compensated if any customer does not pay the full amount of the money that, or the full amount to the business. So here what we do is we sometimes say that okay, this particular bad debts maybe will not be recovered, so we will just write it off. But sometimes it happens that these bad debts are recovered. So in such case, the journal entry will be cash account debit to bad debts recovered account. Okay, so we can also write bank account debit if the bad debts is recovered in form of check, then we will write bank, but usually bad debts are recovered in form of cash. So we are debiting cash account because cash comes in according to the real account, and now bad debts was expense when we are not getting full amount from the debtors. So in that case we used to debit bad debts, because according to nominal account bad debts expense has to be debited. But here, since the bad debts is recovered, this will become gain for our business. So we are crediting the bad debts recovered account, because according to nominal account the gains are supposed to be credited. So here when we have bad debts we debit, but sometimes luckily we recover the bad debts, then the cash comes in, debit, real account what comes in debit, and bad debts recovered becomes our gain. So nominal account it will be credit. The next one is outstanding expenses. It is quite common for business enterprise to be left with some expenses which are not yet to be paid at the end of the accounting year due to one reason or the other. Such expenses are termed as outstanding expenses. So the business enterprise, sometimes they are not able to pay the full expense. Okay, like we have expense, like sometimes the salary becomes outstanding, sometimes the rent becomes outstanding, so which are supposed to be paid in the current year, in the by the end of the accounting year for the current year, but due to some reason these some amounts remains outstanding which is not paid in the current year. So such expenses are termed as outstanding expenses. For example, salary is paid at the rate rupees 1000 per month, and if during the year only 11 months salary amounting rupees 11,000 has been paid to him, rupees 1000 for 1 month will be outstanding salary. So here the salary is been fixed at the rate rupees 1000 per month, but to the employee or to the worker the salary is paid for only 11 months for the current year before the closure of accounting period. So that 1000 rupees for 1 month will become outstanding. The entry will be salary account debit rupees 1000 to outstanding salary account 1000. So here if we see the traditional approach, then salary is an expense. So according to nominal account it will be debited. Now to outstanding salary it becomes the representative personal account, so which has to be given. Okay. Now I had told you earlier that if it is only salary then it will be nominal, but if there is any prefix like outstanding or prepaid with such expenses, then it will become a representative personal account. Okay. So the salary account debit, expense debit, outstanding salary account, representative personal account is being given, so it is credited. Now I have written here outstanding expense account is a liability. This is from the viewpoint of modern approach. Okay, so you have just follow one rule. If you are following the traditional rule of real account, nominal account, personal account, you follow that. But here outstanding expense is a liability which will be shown in the balance sheet, and it is, if we follow the rule of the modern approach, then outstanding expenses being a liability will be credited because the liability of the business is increasing. They have to owe to the worker or the employee 1000 rupees 1000. Prepaid expenses. There are certain expenses which are related to next year but have been paid during the current year in advance. These are called prepaid expenses. So outstanding expenses were not paid in the current year, so next year it becomes outstanding. The prepaid expense are relating to the next year, so you have paid in advance in the current year, prepaid. For example, insurance premium amounting to rupees 1200 is paid on 1st July 2018 for 1 year. You carefully listen to this. Insurance premium amounting 1200 is paid on 1st July 2018 for 1 year. The entry on 1st July will be 2018 will be made insurance premium account debit 1200 to cash account 1200. So here the 1200 rupees was paid on 1st July 2018 for 1 financial year. So insurance premium becomes expense. So according to nominal account we will debit the insurance premium account, and to cash account. Cash account it goes out, real account what goes out has to be. Now, for example, when the books will be closed on 31st March 2019, insurance premium for 3 months, that is from 1st April 2019 to 30th June 2019, will be treated as insurance, will be treated as prepaid insurance. So, here the year starts from 1st April to 31st March, but on July 1st 2018, the insurance premium was paid for 1 year. That means when 31st March will end, after that still we have 3 months premium that we have paid as prepaid or as in advance, that is from 1st April to 2009 to 30th June 2019. The entry will be prepaid insurance account debit 300 to insurance premium account 300. So, here the prepaid insurance account, it becomes the representative personal account. So, here receiving, okay, so the insurance is been received in advance or to the insurance company, to insurance premium. So, here to insurance premium will be credited, okay. And when we go with the traditional rule, then prepaid insurance, when we went with the traditional rule, then prepaid insurance account represents the person to whom the payment is made in advance, and the insurance premium, we are paying a premium. So, it becomes like our, we can say, a gain, and or which has been going out, and if we follow the modern rule, then it will be prepaid insurance, it becomes an asset. So, here asset is increasing and insurance premium will be credited. Prepaid expense account is an asset according to the modern. Depreciation, it is the permanent and continuing decrease in the value of an asset on account of wear and tear and passage of time. It is business expense, though it is not paid in cash. Now, the machinery that you have purchased for your business, the building that you have constructed, the vehicle that you have purchased, furniture, so all these will not remain in same condition as it was on the first day. There will be some wear and tear or some decrease in the value of these assets as the time passes by. So, even though these are not paid in terms of cash, whatever loss or whatever expense that you are bearing while the condition of the machinery or the condition of the building is decreasing or the value is decreasing, even though you are not paying in terms of cash, still we treat it as a business expense. Depreciation is nominal account since it represents a loss. For example, 20% depreciation charged on building costing rupees 5 lakh. So, the journal entry will be depreciation account debit 1 lakh, that is 20% of 5 lakh, to building account 1 lakh. So, here building account is asset. So, it can be anything. For example, here for example, I have given building. If it will be furniture, then 2 furniture, machinery, then 2 machinery. So, here in depreciation account, since depreciation nominal is a loss, will be debited and asset will be credited because the value is reduced due to the depreciation. Okay. So, here it will be credited because the value is reduced due to the depreciation. So, we are reversing it. So when building comes in, the value is increasing, but now because of depreciation we have charged on the building, the value is decreasing, or we can, so we are reversing it and making it credit. Interest on capital account. In order to ascertain the true efficiency of business, it is a normal practice to charge business with proprietor's capital. Profit left after charging such interest are the real profits earned by the business. So the proprietor or the businessman, in order to find the true efficiency of the business, they normally practice to charge interest on their capital. So whatever capital is invested, they charge interest on the capital, and after that whatever profit is left behind is said to be the real profit earned by the business. Such interest is loss from the viewpoint of business and gain for the proprietor. The journal entry will be interest on capital account debit to capital account. Okay, so here we just read that it is a loss from the point of view of business. Since we are making the journal for the business, the journal is usually made for the business, so we will not take the viewpoint of the proprietor. So here for the business, since it is a loss, so according to the nominal account, interest on capital account will be debited and to capital account will be credited, because here capital is increased, or when interest is been given on the capital, so from that amount of interest the capital is been increased, or capital is been given in the business, we can say, or from that to that particular amount of interest on capital, the capital is increased, liability increased, and so it will be to capital account. Interest on drawings account. If the firm allows interest on capital, it should also charge interest on drawings made by the proprietor. So here if the firm is giving benefit to the proprietor by providing interest on capital, so it should also charge interest on any of the withdrawing done by the proprietor for personal use. Such interest is expense for proprietor and gain for business. The entry will be drawings account debit to interest on drawings account. So here the drawings account will be debited because we are treating drawings as the personal account. So since drawings account is a personal account of the proprietor, we cannot write the name of the proprietor, so we are saying that this represents the proprietor who is receiving the cash. We cannot write cash also. Okay, here whenever there is a personal use, money or cash is withdrawn for personal use, then we will write drawings in place of cash, and it is a personal account of the proprietor, and we are debiting drawings because the proprietor is receiving according to the personal account, and to interest on drawings we are crediting since it is a gain for a business. Special transactions relating to goods. Now sometimes the goods are withdrawn for personal use, sometimes it is given as an charity, as the charity, sometimes it is distributed as free sample to promote sales. and sometimes it gets destroyed by fire or there is a loss by theft. So one by one we will see the special transactions relating to drawings in goods. Sometimes the proprietor withdraws goods from business for his personal use. The entry will be drawings account debit to purchases account. So here not only the proprietor withdraws cash for personal use, but sometimes goods are also withdrawn by the proprietor for his or her personal use. So here drawings account will be debited because drawings is a personal account of the proprietor. So we cannot write the name of the proprietor here. So we will have to write drawings account debit because the proprietor is receiving, becomes the receiver. So we cannot write the name of the proprietor. We cannot write here goods because these goods are been withdrawn for personal use. So according to the personal account, the proprietor is receiving drawings or receiving goods. To purchase account. Now we have credited the purchase account because drawings are made by the proprietor. This is not a sale. Instead, this is not a sale, but the goods that were being purchased from there at a cost price, the goods are being withdrawn by the proprietor. So this reduces the purchase. So when it reduces the amount of purchase for the business, the purchase account will be credited. Remember students, this is not a sale. Instead of sales account to be entered in the journal entry, we will credit the purchase account because before when we purchase, we debit the purchase account because it is increasing, but when the proprietor is withdrawing for the personal use, we will credit the purchase account because from that particular amount of drawings, the purchase account has been reduced. Here purchase of business is reduced. So here, since the goods are withdrawn for personal use, we will treat purchases as it has been reduced from the business. So we will credit it. Okay. Goods given away as charity. Charity is an expense of the business. The entry will be charity account debit to purchases account. Now when charity is given, so this becomes the expense of the business. Now here again we will credit the purchase account because the goods are going out of the business at cost price. So here purchases are reduced. So here this charity account is an expense, so will be debited, and purchases are reduced, so it will be credited. We will reverse the debit purchase into the credit purchase. Goods are going out of business at cost price, hence purchases are reduced, so it will be credited. Now here also it is not a sale, we are not selling, we will not treat it as a sale. It is a charity or expense, and so goods are taken out of the business at cost price, and so purchases are reduced, and so it will be credited. Goods distributed as free sample. Sometimes goods are distributed as free samples to the potential buyers in order to promote sales. As such, free samples can legitimately be treated as expenses on advertisement. So usually free samples distribution is a part of advertisement, because we are trying to advertise our goods and promoting sales and telling the potential buyers to buy more, because we are giving a free sample as a promotion for sale, or it is an expense on advertisement. The entry will be advertisement expense account debit to purchases account. So here, since advertisement expense is expense for us, we are giving away the sample goods without any charging any price, so it becomes expense for us. And here again, purchase account will be credited because the purchases of the business is reduced. Loss of goods by theft or loss by fire. The entry will be loss by theft account debit, loss by fire account debit to purchases account. So here both the loss by theft and loss by fire will be debited, because according to the nominal account it will become our expense. And here the purchases account will be credited, because for that amount the purchase is reduced in the business. In case goods were insured. Now we will see one by one different cases. So in case the goods were insured, so the entry will be insurance company account or insurance claim account debit to loss by theft or loss by fire account. So here the insurance company, we can say, in future will provide us as a compensation for any loss. But before it provides as a compensation, how the insurance company it works, it takes premium from the one who has insured. And so we pay, the business pays premium either quarterly, annually or monthly premium. And so the insurance company or insurance claim is been debited, and loss by theft or loss by fire account is credited. So here, since we are making a due, we are showing a due that this amount is been as a premium is been given to the insurance company. So first we will show the due of the goods that has been insured. So insurance claim will be debited, because insurance company becomes the debtor, which we will give us money which is due at the time of loss. So it becomes a debtor. We are giving money to the insurance company, and whenever we have loss by theft or fire, the insurance company will give us money. And loss by theft we are crediting. We are crediting here loss by theft now, because that loss which was loss by theft or loss by fire which had happened now will be credited, because now we are recovering that loss by theft or loss by fire. So this is when we are insuring the claim. We have not received the claim yet. So we are making insurance company as a debtor. Debtor is someone who is supposed to pay us money in future. So what we are doing, we are giving the insurance premium to the insurance company, and whenever there is any loss, the insurance company will cover the loss or the due amount that was supposed to be paid in the insurance claim. A full amount of claim is received from insurance company. Now there was loss by fire and theft, so you claimed for your insurance, and so full amount has been received. The entry will be bank account or cash account debit to insurance company account. So here when you are claiming back your insurance amount on loss, then what comes in? Cash. If you are claiming in terms of cash, or if the claim is in terms of through the bank, then it will be bank account debit. Usually the claims are given in the account, so it will be bank account debit, and insurance company here becomes the giver. Now insurance company is giving you back the amount to cover your loss. So here insurance company is credited because insurance company according to the personal account becomes the giver, and bank or cash account is debited because according to the real account what comes in has to be debited. If the company does not admit full claim, bank or cash account debit, amount received for claim admitted. Profit and loss account debit, claim not admitted to insurance company account. So here suppose you were, your loss was for 1 lakh rupee. Okay, so the company is not giving you the full claim. The company says we will give you only 60% of the claim. So that 60% is the actual amount which has been received. So out of that 1,60,000 will go in bank or cash because 60,000 we are receiving, and remaining what is remaining loss by fire or loss by theft, that is 40,000 will become as profit and loss account, and this will be debited because this is will become the expense for the business. So the profit and loss, or we can say it will become a loss for the business, 40,000, since it has not been given by the insurance company, and here two insurance company will be credited because insurance company becomes the giver of the premium amount, of the insured amount. So cash or bank will be debited, what comes in according to the real account will be debited, profit and loss will be debited. This is the loss by fire or loss by theft. So since it is a loss which is not been given in the insurance claim, will be debited, and the insurance company will be credited since insurance company becomes the giver. Thank you for watching, and please follow, and this is how we do the journal for various different special entries or special transaction for the goods.